Housing Counseling Call. It's glad to have you all. We're going to dive right in because we have a very crowded agenda. We're going to do the very brief federal funding update. We're making some progress on the client management systems and data standardization. Just a quick mention on the sign-on letters that are circulating on, well, circulated or circulating on disaster relief and on displacement. Most of the call will be devoted to two topics: the progress on integrating housing counseling into the mortgage process, very important part of our work, and I think there's some exciting developments. We'll have Gene Spencer and David Birnbaum from HPF, and we'll have Lot Diaz from Unidos US to kind of fill us in on the details. And then big win on language preference, adding it to the mortgage application. Important kind of development that will have a lasting impact, we think. And we'll have Agatha So from Unidos US and Debbie Goldberg from NAFA, from the National Fair Housing Alliance. And then a very brief mention about the Equifax pricing premium has popped up as an issue again, which is, for those of you that have been on these calls over the years, it's an issue that I think affects our industry, but also just is a personally frustrating, irking thing that if there's a way to revive this controversy, we'd love to do it. And then, of course, a chance to join NHRC. We're really appreciating the memberships. So let's dive right in. So Matthew, on federal funding.
Yep, and just very quickly, we'll mention a few things. And we haven't spoken in a month, so we just wanted to give a quick update. But the fact is that there's really not been a ton of movement. Just a couple things I was going to mention. One is folks probably heard, but in the last, I guess it was probably last week, they did pass, the House and Senate both passed budget resolutions, which had been a long and drawn out process, something they were finally able to get done. But the important thing with that is that it's really was just a vehicle to allow them to do tax reform with just 50 votes. Not really significant in terms of actual like funding and spending numbers. So that's just worth noting, but not a huge thing with respect to actual appropriations. The other thing I was just going to quickly mention, folks may have seen that the House Republicans this morning unveiled their plans for tax cuts, or a good bit of detail on what their plans are. The one thing I wanted to flag there that's not related to spending, but or not related to appropriations, but is related to our work, is that it did include cutting in half basically the mortgage interest deduction. So currently, you can take it up to a mortgage of $1 million. This plan would cut it in half to $500,000. That's something that a lot of housing advocates have been pushing for. And the thing with that, though, is we've been pushing for it as a means to pay for more affordable housing programs. It does not seem in any way likely that that's what the House Republicans have in mind. It's really just to pay for the tax cuts. I mean, I thought it was worth noting just because the mortgage interest reduction has always been this kind of untouchable thing. And so it's, there's some encouragement that at least some Republicans don't see it that way. There will obviously be a huge fight from industry groups and others to preserve it at $1 million. But, just thought it was worth mentioning that was something that found its way in. That's, I think, all I've got. Bruce, is there anything you want to add on to that?
No, I think that's excellent. The mortgage interest deduction we've talked about in the past, above $500,000 mortgages, there's only something like 1% of the population that even has those. So it's obviously a very unequal benefit. And though our interest has been that that money be applied to subsidizing rents and home ownership. But clearly not the emphasis in the current conversation in Congress.
And the one thing just to kind of, mention is, in high cost areas like San Francisco, DC, Boston, New York, there probably are some what you might consider middle income families who, have homes well over the 500,000 that, that obviously could impact them. But for the vast majority of folks who are, taking advantage of it up to $1 million are the wealthiest among us.
Yeah, so in practice, what that would mean is that you could only deduct the interest on $500,000 of your mortgage or less. But point well taken. Okay, quickly moving on. So we had a couple months ago, we had a good discussion, and at the leaders meeting in July, we had a good discussion about the client management systems and this concern about how are we going to manage in a world where we're likely to have several client management systems. So there's a lot of innovation happening in the field. New systems are being developed. Old ones are being revamped. It looks like HCO and CouncilMax will go away in some form, but that there's a vibrant world of opportunities of what will replace them. But again, there may be multiple providers. So we have been convening a conversation over the last couple months. David Young is the chair of the committee, has deep involvement by the technology providers that among us in the counseling world. I'm going to do something out of my head, and I'm sure I'll leave off plenty of people, but HPF, Housing Partnership Network, NeighborWorks, eHome America, a new group has just joined us, VistaShare, the Credit Alliance out of Charlotte, a number of groups. What was that?
Hope Loanport.
Hope Loanport, thank you. All right. All of those are deeply involved in this. And the conversation's, I think, been very open, and people are really working hard to try to figure out how this might all work smoothly. And the idea is that there would be a standardized set of data fields that are our data fields that represent our work that every system would have and would allow for relatively easy exchange of information when it's needed, so that if you have multiple funders requiring different CMSs, that you would include the that you would be able to not have to re-key the information. And if you are doing transfers of information to lenders around, foreclosures or whatever, that you wouldn't need to have to set up data fields specific to each one of them, that we'd all have common data fields, and that the reporting to HUD would be common reporting, and that there would be a common that everybody uses. And it was kind of a daunting task in the beginning, but we've now kind of learned that under MISMO, if you remember, MISMO is that cloud of data that will follow each mortgage. MISMO has really established a whole consistent set of data standards in a number of fields in the housing field. It's driven by the MBA and Fannie and Freddie especially, but there's deep involvement by many of the providers. And what we've learned in the last few weeks is that the MISMO standards will cover the mortgage application as is currently. They will do the new mortgage application as it's been finalized. It will have mortgage origination data fields. It will have servicing data fields. It has a great deal more than what we need, so things around appraisal and all the various parts of the business, homeowners insurance and all of that is covered or is going to be covered. They just got the HUD 9902 data fields. Freddie worked with HUD on that, and that got presented in September and is waiting for approval. But all of that means that there's a large, vibrant pool of data that's available that could be used by our technology providers and create a consistent set of data fields. The committee met last week, actually a couple of days ago, just to kind of talk about this and mull it over. And I think what they're considering is, can we adopt these MISMO standards as the standards that the housing counseling community will use, and then we don't have to adopt everything, but what is it that would be essential, for reporting and for client management and for funders, and then maybe how long would it take to integrate? And this would mean that there would be it sounds like we're getting somebody's feedback on the line. and what essentially that would mean is that there would be, this will take a while, it'll take an investment of both time and money, but that trying to figure out whether one, it's doable by the local providers, what should the fields be, and a realistic timeline in which to accomplish this so that we might end up with a much more uniform data system in our field. And then if there are things that aren't properly covered, then maybe a discussion that will follow from here about are there data fields that we need to create on our own and work with MISMO to get established that would help integrate our work. So we're kind of in the middle of this, where the good news is that the data fields are available, that a lot of the work has been done. We don't have to do a lot of that work, and that it's widely available and free, so that it doesn't cost to get the data fields. But there'll certainly be an organizational cost to organizations having to calibrate their systems to make them adopted. But we sort of want to share with you, this is a work in progress, but it's definitely progressing forward. There's a lot of good faith energy going into this. It's a very sophisticated group of people doing the conversations, and kind of good news on this front. I'm going to do even more rapid fire on the disaster relief for homeowners. We had a great discussion a month ago on this. The letter that circulated gave good highlights. I'm actually not going to go through the highlights on the letter. That letter did get submitted to FHFA, and that version of it to FHA and to other providers as well. There'll be more work being done on this. Certainly, if you're in the field working in the disaster area and there are housing counseling issues, please share them with us, with me. Particularly, it's an area that I'd love us to be more helpful in, and we certainly are engaged with a number of the policy advocates. There's a pretty vibrant conversation. We'd love to be helpful. And then finally, just recently circulated and still open is a letter on displacement, which is the issue. FHFA has got its annual, setting its annual goals, and a coalition of California groups led by California Reinvestment Coalition, ACE, and HERA have put together a kind of a thoughtful strategy on an issue that I think I think people on this call are deeply aware of, that where there's affordable housing in cities, especially and especially on East and West Coast and in major cities, there's also lots of price pressure on affordable housing stock, and often gentrification becomes an issue where people, where housing prices go up dramatically, homeowners insurance and especially property taxes can go up dramatically, and it's doubly hard on the people who are living there. If they're existing homeowners, their costs go up. If they are renters, rents go up and go up dramatically, and they can be pushed out of the neighborhood. So this displacement letter is aimed at trying to start dealing with Fannie Mae and Freddie Mac, FHFA is their regulator, and getting them to adopt some policies that would not fund some of the investors that are coming to the neighborhoods now. I'll leave it at that. The letter is there, and it's still open until tomorrow, so certainly please feel free. And maybe, Matthew, we should circulate the letter link in our summary call to be able to deal with it, so people have a chance to take another look at it. Okay, with that note, let's dive in. So we've got Gene Spencer and I hope David Berenbaum from Homeownership Preservation Foundation. We have Lot Diaz from Unidos US. And really the topic here is that there's been substantial progress made on this idea of how to integrate housing counseling into the mortgage origination process with a major lender. You're part of the team of people that have been working on this for the past year, and wanted to just get your thoughts about what it looks like and what we should know and where it might all go. So
sure. Thanks, Bruce. Can you hear me?
Yeah, David. Yes, glad you're here.
Good. So, thank you, and thank you for your cooperation, because it's been more than just the three organizations. It's really been all of us working as a counseling industry together. I'm going to be very brief and then turn it over to Gene and Lot. But really, the start of this, as we all know, began 3 years ago. We all recognize that our funding was being questioned. You know, it was a fight to sustain NFMC in the final years of the program. The HUD appropriation for counseling was always something we had to pay attention to. And of course, we've had modest victories there as well. But 3 years ago, we all began to look back to what I'll call a more normal marketplace, and how we could create a business environment for all of us where our working with consumers who are low to moderate income, first-time home buyers, diverse millennials, boomerang borrowers, or credit-impaired borrowers, elders as well, would be viewed as really a channel for mortgage lenders, so that we could realize our mission of expanding sustainable homeownership for those who are qualified to meet, the origination standards. And of course, we've all been discussing access to credit, frankly, over the past 3 years. Now it's just the critical issues are also becoming simply the availability of affordable units and affordability as well. 3 years ago, HPF, working with many of you and the intermediaries, submitted a comment to FHFA calling out housing counseling as a means for the government-sponsored enterprises to expand access to credit, and as something that should be supported with regard to affordable housing goals and duty to serve. And much to our mutual delight, in fact, FHFA embraced that thought, which then prompted the government-sponsored enterprises to begin looking at broader use of housing counseling programs. So we could apply our learnings during the foreclosure crisis to pre-purchase counseling or coaching and the various models and modalities offered out there, whether it's face-to-face, telephonic, a mix of online and e-learning, and so on. And so we have made a lot of progress in this space. The big tensions, I'm going to turn it over to Gene, is actually creating models that will show a return on investment with proven data analytics, so that we can offer a product that pays our bills, not it takes a loss, so to speak, involves to some extent some skin in the game for all of the stakeholders, not just a consumer, but also, frankly, to the extent we can leverage it, originators, investors, realtors, MI companies, and others, but also shows to the originators that this is a sustainable product, a channel that can, in fact, increase originations so that whether it's the GSEs meeting their goals, which if we looked at some of the recent reports is questionable if they are meeting their goals right now. And then as well, if it's a CRA regulated lender, we can help them realize those goals, or any lender committed to diversity moving forward can realize that. There've been very strategic conversations. You're aware of the loan level price adjuster from Fannie Mae. Gene can cover that. There have been conversations that are moving forward with Lot and others on this call with regard to Wells Fargo. Gene will touch base on that a little bit. But the idea is to create an ecosystem that is RESPA compliant, and I think everyone's familiar with some of the challenges we experienced in that space. And if you haven't seen our white paper, visit our website and download it, so that we all move forward in a compliant way and have a new source of revenue. So forgive me for speaking quickly. Gene, I'm going to punt it over to you.
Yeah, sure. Thanks, David. Yeah, I think you kind of hit the major, focus areas, as David, alluded to. We do have a framework. What we realized some time ago was there, an incentive structure needed to be in place to encourage consumers to take advantage of housing counseling, pre-purchase housing counseling, but also that would encourage lenders to offer it and participate in supporting the offering of it. So, so both, Fannie in particular has established the $500 incentive. And so entities, lenders are to varying degrees are, Fannie is encouraging lenders to take a look at it as a means of generating more production in their home ready product. And Freddie has a similar product with a slightly different structure under the umbrella of Home Possible. But it does, both of these GSE initiatives create a framework and some funding through that framework for the delivery of housing counseling to borrowers who are eligible for those product lines. So from that basis, we've been working with lenders. Wells has taken a key lead here in the structuring their, I think it's Your First Home product to also incorporate incentives for the delivery of not just education but counseling for borrowers through that channel of production. And as David alluded to, but we can't just have a few folks, lenders. Ideally, we would have multiple lenders, both to support this, both in terms of providing greater compliance with RESPA, which requires multiple offerings to prospective home buyers. But the more people who cooperate in this, again, it gives more outlets for housing counseling entities for those folks who are there serving, who may or may not want to go with a specific lender. So if they have other outlets, opportunities with other folks, but who are generally supportive of the framework, then that works to the advantage of all of us, because fallout is a key risk concern for the housing counseling community. That's where you've been working with someone who comes into your channel and then they're in effect prepared and ready to get approved, but then they wind up going in a direction with a lender who may not be involved in the process. So through our last coalition convening, we did invite other folks to join the conversation, some who came and spoke directly to people like Quicken and so forth, but also some folks like B of A who already have programs in place, but we're trying to achieve, again, broader alignment with their processes. So I think I can't speak for Wells, but I think they are focusing on getting their pilot process underway in the not too distant future. They are recognizing that the marketplace is uneven. Some areas, some high cost areas, the reach of this product may not be as successful. They've been trying to think of the geographic areas that have the richest potential. So working through that. So some of the initial pilots may be more focused on specific geographic areas than others. And that gets at some of the headwinds that we are still facing in this process. One of the key headwinds is just supply. Some markets have, better affordable supply than others. And so even if you are a borrower who is seeking to, achieve home ownership, it may be, more likely to be done in certain markets than others. So that's an issue that, people who want to participate in this process have to overcome. The other issue David alluded to is the lender awareness around RESPA. So trying to create an ecosystem that helps that it's important. And another issue that we have turned our attention to is the issue with FHA. FHA in many markets is the preferred execution, actually the most economical execution for lower income and higher risk borrowers. And as we know, FHA does not have a tightly woven link to homeownership. They encourage it, but there is no, direct link between any incentives and FHA production. So that's something that we're focused on right now. Well, I'll close on just one key value element that many of our lenders see out of the housing counseling integration and pre-purchase, and that is the being able to source clients that they may not otherwise get. So being in places where you get people in the process that help them understand that homeownership is achievable, and they come up to speed in terms of their capabilities. But that sourcing is a real value add for many of the lender partners that we've been associated with. And also the doc prep assistance for those borrowers is an important consideration. So not that, counselors would develop documents that would go directly to the lender, but they would help the consumer get their docs docs ready for delivery to the lender. So those are the key pieces of the work that counselors would do that would add a lot of value to the lender process. So let me just stop there. And I think, Lot, you have a view on this, right? So are you up next?
Sure. Yeah, thanks. You covered a lot of the broad categories. I'm going to come back to the regulatory issue and then talk about what groups can do locally.
Yeah.
So on the first group, on the regulatory side, for those of you who haven't downloaded the white paper that David referenced earlier, I would make sure and get very comfortable with it because it's the one document for those of you who have tried or plan to try to do local fee-for-service with your local or regional lenders beyond the national partnerships that we've been talking about here. You'll probably be confronted to some degree with these same issues around regulatory concern on RESPA is the one issue. There's a couple others there as well, but RESPA for sure is going to be a lead element. So I, again, highly want to reinforce that activity. But I think there is from my viewpoint on this, there's some confusion about can local groups form these partnerships today, and within our network, we are encouraging folks to do that as much as possible to the point where we have kind of reached our lender partnership agreements that's consistent with the work being done that was done culminating with that white paper, and encouraging our groups to go to lenders that they are working with now to try to form these partnerships. And the reason I think it's important although the integration work that we've been speaking about that was essentially reestablishing a lender's confidence to work with counseling groups to serve LMI markets, it's literally you're rebuilding it from scratch because old world before the crisis has long gone and it's disappeared, and so there's new players, new regulations, everything, and so it's all having to be rebuilt. But HUD has its policy, and in of itself, it's not completely consistent with CFPB, but it's not that far off, and so we worked our base agreement that consisted a little bit more clear. So it is possible, totally, for you to form partnerships like that. The biggest thing is on the RESPA and making sure comparable lenders who are the family will be shown products, but that is a standard that HUD has had for a long time, and so that shouldn't be anything new to anybody. But I just want to encourage everybody to not give up. If you haven't been doing it, to do more of it, because even if you're not successful, the dialogue you'll have with that lender will be fruitful in terms of finally identifying what are the resistance points. So I just wanted to make that point. And then lastly, kind of thinking about term, what benefit can groups have to the system generally. I mean, Gene alluded to areas that are useful. Help banks meet CRA requirements rather than buying loans. I'd rather them originate them through our groups if possible. And since many of most organizations deal with LMI populations almost exclusively, we're obviously a good resource for that kind of loan. Secondly, and I think is just as he alluded to, getting doc prep. One of the things I will add here is that which we conduct pre-purchase counseling may have to shift a bit to where we're doing more. If to those who are there's some variance in how people set up their HUD file, the loan client file, but making sure we're getting all the key documents required to get application sent into a lender is going to have increasingly. It's going to be more important than it ever has been. I know in our stacking sheets we order sheets for our client files. We encourage our groups. But my point is, it's going to be really essential to work efficiently in the new regime of fee-for-service that's coming, and it is coming. And so that's another point I wanted. And then lastly, what I'm also hoping to stimulate a process. There's a pretty referral service back from lenders to counseling organizations. It's difficult now, primarily for regulatory reasons, also systemic reasons. These are huge. Most of them are very large organizations, and changing routing anything is a complex process, particularly when they're not sure of what the outcomes could be. But I do think there is some work there in terms of where referral business from the lending and community lenders themselves, who obviously get requests. And if I read the HMDA data right, they're denying about half of them. The issue for us is that if we know, if we get a family or an individual who is applying, they'll be aware of it. By the time they're done with us, with a counseling group, they'll know if they're qualified or not. And so that kind of systemic value added one to the other, I think that needs to be tapped, and that as time goes forward and more confidence is gained in the new fee-for-service regime, my hope is that will help ease the issue of marketing our service, all those kinds of other things, which is in most organizations I know is a very hard thing to do because the resource question, right? But anyway, I think that's all I have, and Bruce, I'll take it back to you.
Yeah, I think just to add to all this, I mean, that's a good summary of the big themes here, and it does look like the Wells project is moving towards a model of the incentive for the home buyer to go to both education and counseling, and then also funding for the housing counseling agency for doing the counseling work, and their concept, just to touch on what just Gene and Law just talked about, is their concept is that the way you pay for this is by the reduced cost of originating loans, because you are now getting a well-packaged home buyer, and also because you're going to reduce the number of declines, and that the people who come to them from the general public, especially in the LMI sector, have a much higher decline ratio. It costs them the same to process an approval as a decline. It's quite an expensive one, or almost the same. But I mean, it's an expensive process, and that's a turnaround that if we can get those, if we can really get them people who are ready to go and get them well packaged, that's a deep value added that will help pay for the costs of doing this. I'm hoping that this will also kind of build into the system the idea that the entry point is the housing counseling agency, and getting them to be prepared well before they go to see a real estate agent, before they see a lender, and that be a part of the component.
Yep. And Bruce, if I could just do a shout out to you and Lod, as well as others. There are also some exciting new models developing, with particularly in the down payment assistance space. But I'll just speak to one that has emerged recently, and that is a new demonstration with CMG Financial, a new product that will be using crowdsourcing. So leveraging Fannie and Freddie's down payment programs so that you can approach family and friends using social media. But the part that's really exciting, and a number of us were at a meeting recently after an MBA advisory council meeting with CMG, is that they're also interested in funding pre-purchase counseling for folks who enter their program. You know, this is modeled on wedding type of crowdsourcing and other gift programs. It's a whole new approach to the work we do, and the fact that industry is willing to embrace our models for this program really is a testament to the work that we have done over the past number of years.
Yeah, and down payment assistance is just going to become more and more crucial as property values go up in many of our markets. These are a lot of innovation we can use here. Good point. Are there any questions in the hopper, Matthew, quickly?
Yeah, just I think one just quick one. Somebody had asked about if there's any interest, if the fee-for-service arrangements cause any conflict of interest issues around your 501c3 status. Is that something I've not heard that come up as an issue? But is anyone?
No, I mean, go ahead, Lon.
Go ahead. I was just going to say a conflict of interest is different. If you're talking, the only 501c3 status issue is based on income. That would be that's critical. So so in other words, if you earn so much fee-for-service income, will that somehow damage your 501c3 status? And the reality of that is that's only true if it's not in your mission itself. And obviously that wouldn't be true for a housing counseling organization. The fees are earned as you're delivering your mission to the marketplace. So I don't think that would be an issue. The other issue is conflict of interest, meaning are you compromising your institution's neutrality by working in this manner, right? And the answer to that is, well, there's no clear, there's somewhat self-defined, but the issue here is that from HUD, when HUD drafted its original policy on this, the assumption is that every housing counseling organization was looking in their community for the best products, right? And to avoid the steering issue, the assumption was they were going to identify those products, and if they were going to recommend product to a family, it's going to be the best available, or at least the three best that they know. And usually, my experience in the past has always been they've been the best. So, helping them make their way to one of the best products in the community is never a bad thing. And so that's kind of how HUD ended up with that. At least my interpretation of what they wrote is that they trust their certified agencies to find the best products and channel their clients to those if they qualify and if the family selects that product because they see it in their best interest.
That's great, and this will be an ongoing conversation, and especially on this, I think we should plan on maybe in 6 or 7 months from now when the mortgage program is more fully in place to maybe reconvene this conversation, see how things are going, what the learnings are, and what we can do to build on it. But the idea that expanding the market is built into the whole housing counseling program as step one, and there's incentives for the home buyer and for the housing counseling agency, and that we're seen as kind of instrumental in all this. It's a major step forward. So good work on everybody's part here. So thank you, everybody. We're going to move on to language access so that we can keep rolling here on critical issues and where we are seeing some real progress in an area that's been a difficult challenge for us in the past. So people who have been on this call for a while know that we've been deeply concerned about how to create a systemic solution for the problem that so many people in the United States, English isn't their first language, but they have a good source of income, and they are stable and have the ability to become homeowners and contributors to their community. And the whole system is not well designed for them either to buy a house or to stay in the house if they're having troubles with a mortgage. So this was kind of a big breakthrough, and I hope we have Agatha So with us from Unidos US and Debbie Goldberg from the National Fair Housing Alliance. Agatha, Debbie, are you here?
This is Debbie. I'm here.
Excellent.
This is Agatha.
Great. Okay. Well, thank you so much. I know this is. Why don't you give us a sense of why this is important and what the value is of having having language preference added to the IRLA, to the Uniform Residential Mortgage Application. loan application.
Agatha, you want to start off?
Oh, Debbie, why don't you start off? I think you've been in this fight a little bit longer.
Sure. Okay. So as Bruce says, this is an issue that folks have been working on for a long time, right? So, going back to the height of the foreclosure crisis, we were hearing stories about borrowers who, don't speak English, who ran into all sorts of problems dealing with their servicers, trying to get loss mitigation, trying to hold onto their homes and avoid foreclosure. And I won't walk through all of the different problems that people have encountered. I suspect most of you are familiar with many of the ways that these problems kind of present themselves. But suffice it to say that it was an issue that a number of housing advocates who are concerned about home ownership and concerned about access for people who may not speak English, have been trying to figure out how to tackle for some time. And we've done a number of different things over the last several years, but one is that we have been engaged with Fannie Mae and Freddie Mac, and in particular with folks at the Federal Housing Finance Agency, which regulates Fannie and Freddie, to try and get them to take more steps to ease the way for borrowers who don't speak English. And, one of the really threshold issues, I guess I would say, is how everybody knows which borrowers don't speak English and therefore need both translated documents to the extent that that can be possible, so that they're reading, whether that's a mortgage application and mortgage documents, or whether that's loss mitigation documents, both of which can be, or all of which can be very complicated documents, even, if you are an English speaker, right, to try and understand all the nuances there can be difficult. And if English is not the language that you speak, and you're reading these documents in a foreign language, that, that right there sets up some likely problems. So to try and get access to translated documents, and equally important, to get access to oral interpretation services, so that when borrowers are talking to their servicers, they're doing it either with somebody on the servicer staff who speaks the same language they do, or through a housing counseling agency that has staff that speaks that language, or if need be through another third party, language line type provider that has staff that speak the appropriate language. So just knowing who are we talking about and what language do they speak is really kind of a starting point for addressing a whole range of problems. And I think it was Bruce, actually, who came up with the brilliant idea, as FHFA was looking at the redesign of the Uniform Residential Loan Application, that we should just include a question on that application form that would ask the borrower to identify their preferred language. And so this was a conversation that we pursued with FHFA. The industry, needless to say, was adamantly opposed, raised all kinds of largely not well-developed arguments against it, concerned about their fair lending liability, I think, to a large degree. And initially, FHFA said, nope, we're not going to do this. But without boring you with all the details, they ended up taking another look and just, I forget the day, Agatha perhaps will remember the day, but within the last couple of weeks, just announced that, in fact, they are going to add this language preference question to the Uniform Residential Loan Application. So that will give the borrower the opportunity to say which language is the one that they prefer to communicate in. It's very clear that expressing your preference here does not guarantee that the servicer will be able to negotiate with you in that language. And in fact, it says that, your mortgage transaction is likely to be conducted in English, but it doesn't give the option for as many languages as we would recommend, although it has, I think, the top 4 or 5 languages that the limited English proficiency population in the country speaks, and then the option to identify another language as another box, essentially. But I think it's going to be just an enormous step forward in helping us know which borrowers out there need help in a language other than English and what those languages are. There are some challenges ahead. This is the beginning, not the end, of a more robust set of solutions to the problems that these borrowers have faced. And I would say that one important role for housing counselors will be to encourage the borrowers that you work with who don't speak English as their first language or prefer to conduct their transaction in another language, to indicate that on the application form when they fill that out, so that they don't feel like in some way this is going to be used against them, because it's going to be really important to kind of create this base of knowledge about who's out there and what language they need help in. So let me stop there and see if Agatha has anything that she wants to add, and then if we have time, Bruce, there maybe we could talk about what some of the other necessary steps in this process might be.
Great. Agatha.
Hi. So I just wanted to add to Debbie's, I think very robust overview. So basically redefining where are we. So we, FHFA made this announcement on October 20th. So it's about a couple weeks ago. And this truly, is a very key decision. I think Debbie did mention that this is, definitely a decision that's been years in the making. And, the opportunity that Bruce identified was, very much, it was truly important, because just to give you a sense of how often government documents are, actually redesigned or even reopened, and that is, not very often. So the last time the loan mortgage application, the universal residential loan application was revised was almost 20 years ago. So we had this very key opportunity to insert a very important question. Some may say it's a very small question, but it's a very powerful question, again, as Debbie alluded to. So, during the crisis, and actually, even after the crisis, we have noticed and have been following how well not only Latino communities, but how immigrant communities have been able to re-enter the mortgage market. And not only from a perspective of being, able to, apply for a mortgage in this particular climate and environment, where, so few people are able to qualify, but also ensuring that people are not, have access to safe and affordable, mortgage products. So I think there are a couple different goals here. So, as Debbie said, this is just the first step in a number, in a number of key steps to really help improve language access and improve opportunities for low-income and immigrant communities in terms of their access to the mortgage market and an opportunity to buy a home and, to build wealth. So, the next step in that, the coalition that Debbie and I and Bruce and many others who are on the call and many other HUD intermediaries, for that matter, who are part of this coalition, our next step is to really help make sure that the GSEs, Fannie Mae and Freddie Mac, make good on their promises to actually take steps to improve language access, which means thinking about ways to integrate language assistance, whether it's the help of a housing counselor who speaks, who's bilingual, or it's providing language line assistance, providing translated disclosures, just really integrating a number of different resources and tools to really allow borrowers, especially low-income and, immigrant communities, to be able to comprehend and really become successful in the mortgage market. So, as Debbie said, I feel like more of an echo. The fight is not over, and so we really need to think about the long term and and how housing counselors can be good informants of what's working and what's not working in the field. So please either work, let Bruce know, let Debbie know, let Unidos US know, speak with your HUD intermediaries, and really just, help us figure out and join us in becoming advocates and for a stronger voice to make sure that we are really, truly, and in a meaningful way, expanding access for people who are, really struggling to get into the door, and to make sure that they have access, to homeownership in a safe and affordable way.
I'm glad you said that. I mean, so the way that we were successful in many ways was that we both had a strategic idea of how to do this, a broad coalition, especially through Americans for Financial Reform, and formed a working group that Agatha just mentioned. But it was also, we were able to bring in a number of housing counselors at different key parts of the conversation and give really graphic examples. So people who are active in Unidos US and with Center for New York City Neighborhoods and a variety of networks. I mean, I'd like to do a quick shout out to the national capacity people who really embraced this issue, and especially Song Hutchins, who I think really helped us make this an issue that was very vivid in people's lives, help policymakers really think all this through, that kind of, this is what's happening on the grassroots is incredibly helpful and useful in these stories. You can always find data, but you don't always get the human side of it. And I think we've been able in a number of these meetings to do that and do it really well. That was a key piece to this. So in getting this onto the application, what happens then is that it becomes part of the information cloud that is attached to the mortgage application. That means that when a lender needs to decide in the process how to communicate, they at least have the information at their fingertips about what the language preference of the family is. Now, as Debbie said, the first sentence in this whole section is that this does not guarantee that in fact, you can expect that the transaction will probably be in English, some wording like that. And we're trying to tamper down the expectations of the customer, of the home buyer, because if they say if you put down Portuguese and the communication isn't in Portuguese, that was one of the lender arguments. I thought the FHFA did a good job about diffusing that one. But holding that information with the application is one important part, so that every moment they can always know what that is. Second part that still we have to figure out is what happens when the application goes through closing and gets to the actual buyer of the loan, and can that information transfer in the closing process? This is no simple thing. A lot of information in the application drops off, and so trying to make sure that happens, and then also that anybody who has the servicing rights has that information. And as many of you know, and we lived through during the foreclosure crisis, there were just an ongoing problem of people getting documents in English and the household speaks Spanish, and they had no idea they were getting an offer that might give them a principal reduction or a long-term modification, and you as a counselor get the thing and the deadline's gone, and those kind of unfair and just totally exasperating problems can at least get addressed. Now, this doesn't do everything, and Debbie wanted to talk a little bit about what some other things need to get done. So, Debbie, let me turn that over to you.
Well, actually, Bruce, you just talked about what I think is the key one, right? Which is making sure that this information, goes with, stays with the mortgage over the entire life of the loan, so that as servicing rights get transferred, as they often do, every subsequent entity that touches that loan knows what the appropriate language is to communicate with that borrower. And then the second thing is to build this other kind of robust set of tools to really help those borrowers in the form of translated documents, probably starting with disclosure forms, which seem to be the least controversial. I think we would all ideally love to see, actual mortgage applications or modification documents, be in other languages as well. That's a heavier lift. And then having a robust set of oral translation resources available to borrowers as well. So that, because the documents don't do, as I said before, they're so complicated, they don't really communicate all the information effectively that borrowers need to understand. And so having somebody who can talk you through it and can do it in the language that you understand is really important. I wanted to just mention a couple of other things real quick, if I could, Bruce. Is that okay?
Yes. Yeah.
So one is, I think that we really need to give a shout out to Mel Watt, who's the director of the Federal Housing Finance Agency, and Janelle Bird-Chichester on his staff. I think she's chief of staff, although don't hold me to that. Anyway, two key people at FHFA who I think were really decision makers on this and really deserve our gratitude. It was, there was a lot of pushback from the industry. We can't emphasize that enough. And so it was not a slam dunk for them to make this kind of a decision. And I think we not only need to celebrate, which we definitely do, we also need to be, express our gratitude to them. So that was one thing. A second thing is that we should be clear that this revised Uniform Residential Loan Application Form is not something that's going to appear on everybody's desk immediately. If I remember the dates correctly, the form will become available for use July of 2019. And then lenders that want to sell to Fannie and Freddie will be required to begin using it January 1st, 2020. So we got some time here where this document is not going to be in use yet. And I just want to point out that we right now have hundreds of thousands of people around the country who are in areas affected by disasters: Puerto Rico, Virgin Islands, Florida, some in Georgia, Texas, and now as well California with the wildfires. All areas where there are significant numbers of people who are not proficient English speakers. And so, unfortunately, the benefits that we hope to get from this revision to the IRLA, as it's called, aren't going to be available to us in the short run. But one thing I wanted to mention is that a number of us have worked on putting together a set of principles that we think ought to apply to the way the servicers work with borrowers in disaster-affected areas. And with leadership from AGASA, some of those principles speak specifically to the needs of borrowers who are not English speakers, and they get at some of these questions about document translation, oral interpretation, and outreach in languages other than English, and also in servicers taking a look at their portfolios and trying to figure out which languages might be most predominant for people who don't speak English. But, whether and how these principles actually get adopted, we don't know yet. And so I think it's also really important for you all as counselors to be on the lookout for, your clients who don't speak English and who need help in other languages, because there's going to be, I think, a lot of demand for loss mitigation in the places that have been affected by these disasters. People's lives tend to be really upended financially as well as everything else, and working your way through the insurance and et cetera process of rebuilding is a very complicated thing and often leaves people unable to make their mortgage payments. And so there's going to be, I think, a lot of need for help, and we need to have our radar up for that in the short run.
Great, and that's the principles that you're referring to are in the letter that we talked about at the beginning of the call that we'd circulated. The disaster relief letter that had gone out as well. All excellent work. Thank you, everybody, for all the excellent work you're doing here. Very, very helpful, and love this plug to get counselors to elevate the issues that they are seeing in the field. And so much this is how we build the policies that we have. So thank you, everybody. I'm going to dash right now in the last minute of the call to quickly remind people about this issue we had with Equifax. That we found that when we were actually handling credit reporting pricing, that it was substantially more expensive to get Equifax reports than TransUnion or Experian, and the reason was that Equifax charges substantially more for their soft pull credit reports, the ones that we're allowed to pull for our clients, and then they do for hard pull, the ones that lenders pull. And that TransUnion and Experian don't charge more. They charge the same thing because it's the same report. And the only difference is that it's labeled differently, and that you don't get a ding on your credit when you have a soft pull. And this always seemed like a gross challenge at the time we were doing it. There was a third premium, though I understand that in some situations people have found that it's twice as expensive. So I don't know. Whatever it is, it seems grossly unfair, and especially given that our clients are largely low and moderate income, or heavily people of color. This seems like just a gross and unfair thing. We raised this with the CFPB. They ultimately came back and said they are not allowed to address issues of pricing, and so we're not able to do anything with it. The issue came back up again because all the scandals around Equifax and the data breach. Gretchen Morgenson was looking at this, the New York Times, and included that in one of the sets of issues that got raised. So it's a nice jog for me again to see if we can't get that issue elevated some. And there is some legislation kicking around credit reporting reform, and seeing if we can't get that included is one of the things we'll try to do. So with that note, quick plug to please join NHRC if you haven't already. We've had a great year and lots of good new memberships. Really appreciate the support a lot. You do, I mean, there's some membership benefits to being a member of NHRC, but the real reason to join it is to really to support the work we're doing, which supports the work that you're doing. And we really appreciate what you're doing out there. Really appreciate the memberships. We appreciate the renewals, which have been doing quite well this year as well. So this is what keeps us going, and it's independent money that's not dependent on anybody else. Gives us flexibility, allows us to lobby when we need to, all those kinds of things. So with that quick note, we'll be back in 2 weeks, but thank you everybody. I think this has been a pretty high value call. Thanks.